to fail its own spike off the first spike. Yeah, it's highly likely to fail the first. It's highly likely to fail the bounce. What's up guys, Steven Dux here. Today we're going to talk about our January and February monthly recap. More about January than February because we just started February. Recently have made around 254,000 till February 8th, and most profit came from January. It's been a decent month. MBOT, I think was ZKAN, and a couple decent bounce short and gap up short. It's about around 245,000 if you minus the borrow fee. And this is my account statement. Let's get into some of the tickers that we trade in January and February. So I did a weekly recap about MBOT before, so let's talk about ZKIN. So in February, we don't have much going on, and I want to talk about some of the trades that people are mistaken by, because a lot of people are trading into high price range. They're trading into $20 stock or $30 stock. Yes, sometimes you might get lucky with it, sometimes you don't. The way you want to focus in the market is you want to focus on the odds, you want to focus on the best setups you want to trade. Don't trade like a gamble. You want to reach that consistency, you need to practice that habits. If you don't have the habits, you can't really trade that well. So on ZKIN, this one, it did a really light volume in the pre-market, and it had a huge volume spike in the morning. You kind of just feel it all the way to where it began. About this trade, typically when stocks spikes huge after the market open, if it doesn't really have a really heavy volume in the pre-market, it can't really support the morning spike. So most likely you are going to expecting like a morning pullback or something. Here, it really depends on if it does have historical resistance or not. Now looking at the ZKN chart, it doesn't really have historical resistance. It's a fresh chart, and in the morning it is really difficult to pick up an entry, because if you don't short at the top, then your risk range will be huge. And when you are trading all those gap up short without resistance, if you're a beginner, I don't suggest to trade this kind of setup. If you're good with it and if you size in correctly, you can get a massive amount of risk. You can get a massive amount of risk reward off this. So if you find out it's a little bit too risky, that's okay. Because if the stock did a round before, they will always do a second or third rounds afterwards. So you will see a couple bounces afterwards in your next week or two, and you want to find the most consolidation area. So the next bounce, if it reaches to about $3 level, you will be a potential short. Look at the volume traded on ZKN, traded about 12 million volume. So it's pretty decent volume to short into, but not really heavy. Now let's talk about some of the high range price stocks. For really high range price stocks, something like $20 or $30 or even $10, and you are trading into a large market cap zones. Now for the ideal of penny stock or ideal of mid cap stocks, how they work about the percentage is the more market cap you have, it's going to take more money to increase the percentage gain of this specific ticker. Let's say you want to EGAN to spike about 100%, you need about 300 million market cap. You need 300 million of actually cash to pull in to this ticker to make this stock spikes over 100%. Let's look at microcaps. If the market cap is around 20 to 50 million, it only takes about 50 million to make the stock spike 100%. In that case, you will have a lot more range to play into all those microcaps, because for mid cap, if it's not a really huge hype, most of the time it takes weeks or months to make the stock drop about 50% or 30%, 20%. I won't suggest trading into high range stocks, except you are trading options. That might be different stories. The next thing you guys want to pay attention about is the historical chart. So if you look at all kinds of high market cap stocks, let me give a little bit better chart history. So looking at the entire chart history, and we'll see a little bit consistent volume trading across a couple years, and the volume is not that great. So if the first individual candle on the intraday is overwhelming all the candles from the history, and it's on first screen, that it is a really dangerous to short into. and it's not very good to go along with if it's on a mid cap or large cap stocks, because I've tested the statistics. Almost all large caps, if they're over 500 million or $1 billion market cap, it's really hard for them to go over even 50%. If you are a short-term trader, it doesn't really work on the long strategies. I would suggest to focus on lower caps. Here is the example, is very similar to ZKIN. So you see this run, TMSR, it ran from 3 to 9 and you fade all the way back and did a little bit bounce off here in the February 5th. It barely hits the resistance and it fell back. So this will happen on ZKIN as well. Again, it's probably taking a little bit longer, but if you look at the chart, they're super similar to each other. ZKIN, first bouncing candle, fade all the way back, and if it bounces, it will fail. Now ZKIN, now TMSR, first candle with the solid individual resistance, and here's a little bit bounce, and it failed. So all those bounces, if the volume doesn't overwhelm the previous candle volume, it's highly likely to fail the bounce of the first spike. So that will be the entire January recap for this video. There's nothing much going on in January and February except MBOT and ZKIN and other little trades there and there. Not much huge runners going back and forth. I remember last 2018 there's a huge runners in February for a couple times, RKDA, DXR and all that. So make sure to pay attention to the February. I think February is a decent season. So for hot season, there will be February during the summer and during the holiday years. So Christmas, November and October. That's the most active month that I typically focus on. So that'll be it. Thank you very much. That's the end of the video, and hopefully it's helpful. And I'll see you guys next time.